Today's episode is sponsored by Land Gorilla, the premier software for managing renovation and construction loans. Let's face it, renovation loans can be messy, but your draw management shouldn't be. Land Gorilla brings draw requests, disbursements, change orders, and project data all into one single experience. The platform eliminates communication gaps so you can deliver faster draws and scale your pipeline safely. Learn more at landgorilla.com. Imagine showing 20 homes, 20, writing offer after offer, only to lose every single one to buyers offering more than the asking price. That happened to a friend of mine a few years ago. She's a real estate agent, and she was working with a young couple trying to buy their first home during one of the most competitive housing markets we'd seen in years. She knew what I did for a living. She knew that renovation loans existed, and that's what I specialized in. But she admitted something to me. She was afraid of them. Not because she thought the loans were risky or they wouldn't close, but because she didn't understand the process well enough to confidently recommend it to one of her buyers. So we sat down and talked, not about guidelines or underwriting or regulations, but about expectations. I explained what she needed to know and gave her a few ideas on how to present this as an option to her clients. I didn't want her to get too detailed with them, and so I asked her just to send them back to me if they had any questions. Armed with that information, she presented renovation loans as an option to buy something they hadn't yet considered, a home below their budget that needed work. She showed 2 more houses, one that needed extensive renovation and the other that needed mostly cosmetic work. They decided on the latter, the one with the cosmetic work, and ended up writing an offer below asking price, and that offer was accepted. That loan closed in 57 business days, and not long after that, the same agent helped another family purchase their first home using renovation financing. That loan closed in 48 business days. The truth is, we could have closed both of those loans a lot quicker. Neither loan was delayed because of financing, but they didn't close as quickly as they could have because we were waiting on docs from the contractor. It's a great example of why these conversations matter. In the last episode, we talked about setting expectations with borrowers. In this episode, we're going to shift our focus to the 2 groups that either can become your greatest advocates or unintentionally become your biggest bottlenecks: real estate agents and contractors. Let's start with real estate agents. In my opinion, they don't need to know everything. One misconception loan officers think is that they need to teach the real estate agent everything about renovation lending. You don't. I would even argue that you shouldn't. They don't need to become renovation loan experts. That's your job. I very rarely discuss loan guidelines with agents. They simply need enough information to understand the process and keep the transaction moving forward. Your job is to build their confidence by removing uncertainty, not creating information overload, and not arming them with information that would tempt them to do your job for you. I'm not going to go off on a tangent here because it is one of my pet peeves, but real estate agents often don't know where this line is drawn between the things that they can discuss without licensing or the things they need an NMLS license to discuss. So I was always careful about what I shared with them. I'll get off my soapbox now and move on to pre-approval. Each time I emailed a pre-approval letter to a home buyer, I would carbon copy their agent on the email and include everything they both needed to know about the buyer's approval amount and what needed to be included in the purchase contract. For example, it would be important that they both understand the buyer's approved for a certain amount of money, and that amount represents the combination of purchase price and total renovation costs, not just the purchase price. And maybe it was important for them to know the maximum allowed for seller concessions. You probably do the same, but I always encourage them to call me with the property address and a few other details so we could run numbers before they place an offer. Speaking of the offer, the purchase contract sets the tone for the transaction. So I coached agents on the things that they need to do to write the contract for renovation loans. For example, there's a subject to contingency that needs to be in the offer. It goes something along the lines of, this offer is contingent upon the borrower's mortgage approval and any quote-unquote required repairs as determined by maybe HUD and or the lender, something along those lines. I also helped them to identify the right type of financing on the contract, and I always asked for a 60-day close. Could we close quicker? Absolutely. In fact, my career average was closer to 42 days. But I learned years ago not to overpromise, because I can't control how quickly a borrower is going to find a contractor, or how long it would take a contractor to submit a bid, or how long a consultant is going to take to deliver their report, or if revisions were going to be needed. I'd rather be ready to close early and have extra time and pleasantly surprise everyone than promise 30 to 45 days to close and spend the rest of the transaction apologizing. My advice: Don't make your referral partners guess what they have to do on their end, or what the process is going to look like, or how long it's going to take. Make their jobs easier. The property matters too. Before we got too far down the road, I always asked agents a few questions about the property. Are the utilities on and functioning? And that means all of them: gas, electric, water. Agents were pleasantly surprised when I told them utilities didn't have to be turned on before the appraisal. It's a best practice, of course, but if the water hasn't been turned on because of a busted pipe, well, we're not going to make them go and turn the water back on. Instead, we would simply increase the contingency reserves. The agent didn't need to know that, but that was the purpose of me asking the question. I'd also ask if there was a well or septic system, and is it functioning? How old is the home? Because if the home was built before 1978, depending on the scope of work, I might need to address any lead-based paint concerns. Are there any health and safety issues or structural concerns that I should know about? I tried not to make it sound like an interrogation. I was just simply trying to identify any potential issues early on, because the earlier you uncover any problems, the easier they are to solve. Next, I needed to help agents understand their role. I explained that more access to the property would be required, and that's because other parties need to see it. The contractor, possibly a consultant, of course the appraiser, but sometimes architects or engineers needed to see a property, or sometimes specialty inspectors would have to dig into a problem deeper to know exactly what work needed to be done to solve it, and they would all need access. Helping coordinate those appointments is one of the easiest ways a real estate agent can keep a renovation loan moving forward. I prepared them for something else. With renovation loans, there are a lot of moving parts. Sometimes a buyer needs a little encouragement to find a contractor more quickly, or their contractor hasn't delivered a bid in a timely manner. It's not unusual, it happens, but an agent has a special relationship with their buyers, and I discovered that buyers would generally respond better when their agent asked them to do something. So I let the agent know up front I might need to call on them if the process seemed to stall, so they can help me create a sense of urgency. I'm a big fan of transparency, and I believe the process works the best when everyone communicates. Now let's talk about contractors, because they can make or break a transaction. They can also become one of the biggest sources of delays. And one of the biggest mistakes I see loan officers make is trying to communicate with contractors exclusively through email. I rarely did that. I picked up the phone. Contractors are busy, they're in trucks, they're on job sites, they're meeting subcontractors. They're not sitting behind a desk refreshing Outlook every few minutes waiting for your emails. A 5-minute phone call will often accomplish more than half a dozen emails back and forth. And here's something else I've learned. When you ask a question, then simply listen. Contractors will often volunteer information you never thought to ask, and sometimes those conversations uncover potential problems before they become loan problems. Here's another recommendation that might surprise some loan officers. I don't recommend delegating your first conversation with the contractor to your loan officer assistant or your processor. Now, don't misunderstand me. Processors play an incredibly important role in renovation lending. But this first conversation, I believe it belongs to the loan officer. Why? For 2 reasons. First, you're missing a tremendous business opportunity if you delegate this. Whenever I spoke with a contractor, I wasn't just validating credentials. I was learning about their business. I'd ask questions like, what type of work are you best known for? Or what are your favorite projects to take on? I like that question, by the way. They love that one too. For me, I was trying to determine if they were going to be a good fit. Are they primarily a remodeler, or are they a roofer or a plumber or some specialty contractor whose projects usually aren't large enough to require financing? Once I knew they might be a good fit, then I'd ask, how many projects do you typically bid each week? And how many of those turn into signed contracts? And my favorite question, why don't the other homeowners move forward? That one question taught me more than anything else. And over again, I heard the same answers. The project costs were more than they expected, or they just didn't have the money. And every time I heard that, I thought, those are exactly the homeowners renovation financing was designed to help. This initial conversation isn't simply contractor validation, it's business development. And if you hand that conversation over to someone else, you may never discover a contractor who could become one of your best referral partners. Managing renovation loans means balancing a lot of moving parts. For years, I've relied on Langorilla's comprehensive draw management software to eliminate manual errors and keep projects moving. It handles everything, from overall draw pipeline scaling to the tedious day-to-day renovation-specific headaches like built-in databases for 203K consultants and contractors, automating credential tracking, and streamlining disbursements. Backed by ongoing support that's friendly and experienced, they're a total game changer. Visit landgorilla.com today. The second reason I don't recommend delegating that first conversation is something I've unfortunately witnessed several times throughout my career. I've heard processors pick up the phone and approach contractor validation like it's an interrogation. Short, demanding, harsh, sometimes even rude. Now, I sort of understand why. Processors are busy, they're trying to collect documents, get loans to move forward, clear conditions. They've got a lot on their plate. But contractors don't experience that conversation the same way. From their perspective, a lender they've never worked with is asking for licensing, insurance, workers' compensation, possibly certifications, and they have very specific requirements when it comes to the bid. To contractors, those requests can feel overwhelming. If the first interaction they have with your company is unpleasant, don't be surprised if they're slow to respond or if they decide to walk altogether and forego working with the borrower. I've always found the opposite approach works much better. Be conversational, be curious, be friendly. Ask your questions, then stop talking and listen. Contractors will often volunteer information you never thought to ask about. Sometimes they'll tell you about projects they're struggling with. Sometimes they'll tell you about staffing issues. Sometimes they'll mention when they just changed subcontractors or that they primarily work on projects that aren't remotely close to your borrowers. These conversations can reveal business opportunities like we've already talked about, but they can also reveal red flags pretty early in the loan process. So kindness isn't just good customer service, it also leads to quality risk management. Once you've had the conversation and established a relationship, then you can explain exactly what you need from them. Explain the why. When I called a contractor, I didn't start by asking for paperwork. I started by explaining why we're asking for it. I explained contractor validation is required by the loan program, and I always made sure to specifically mention who backed it: Fannie Mae, Freddie Mac, HUD, USDA, VA. That way they knew the requests were coming from an agency, and those agencies don't mess around. I'd let them know we need proof of licensing or registration, liability insurance, workers' compensation, and any certifications that may apply. That one conversation saved an incredible amount of frustration. They were prepared before they ever got an email request from me to begin the validation process. Next comes the bid, and this is where many contractors unintentionally create delays. When I spoke with contractors, I explained exactly what needed to be included on their bid. Not because I'm picky. Well, I am picky, but that's not why. I explained it up front because incomplete bids almost always go back and forth for revisions multiple times. And I wanted to prevent the contractor from working on a bid that underwriting would condition heavily. I wanted to prevent them from having to redo work. To me, it was much better to get in front of it. I let them know it shouldn't be an estimate, but a bid with an agreed upon amount for the work that they had agreed to perform. It needed to be detailed so anybody could pick up that bid and determine what work was being done and where. They needed to itemize labor and materials per line item. The math should be accurate and all the line items should add up. The subtotal should equal the grand total. You'd be surprised how many times we find flaws in the math. They should identify which permits are required and how much they cost. And they should tell us how they want to get paid. How many draws do they need? Do they need an initial deposit up front? One thing contractors really appreciate is knowing that the renovation funds are held in a renovation escrow account and they are guaranteed to get paid as long as the work is done satisfactorily. Some contractors I've spoken with have shared their frustration with homeowners who skipped out on the last payment or stopped the job midway through because they ran out of money. So this is something I always made sure to share with contractors because they found it reassuring to know that that money was secure and deposited in a renovation escrow account. And it sort of compensated for all the hurdles we were asking them to jump through. Back to the bid. They should include start and completion dates and let us know whether the property would be uninhabitable during renovation. If it was going to be uninhabitable for a period of time, we needed to know how long. There may have been other bid requirements too, but I tried not to overwhelm them over the phone. Instead, I told them I would summarize everything we've just discussed in an email and send a sample bid so they can see exactly what we needed. And one thing I always told them, don't sign it yet. Let us review it first. I set this expectation because of another hard lesson learned. Unfortunately, I had a deal where the borrowers and the contractors signed multiple bids because we'd asked for bid revisions, and so they would revise the bid and sign it and send it over. And every time they revised the bid, they did it without changing the date on the bid. So we had multiple bids with different scopes of work, all dated with the same date. And then later, during the renovation phase, when they disagreed about the work that was supposed to be done, Well, you can understand why that presented an issue. There was confusion about which bid was the final bid. After talking about bid requirements, if a consultant needed to be involved, I would plant that seed too and maybe explain who a consultant was and how they might interact with a contractor. And it was important to let the contractor know about any contract deadlines or when I thought we could close, not just for us because they have to juggle their own project deadlines and scheduling. Let me circle back to a story that I started to tell you. Remember the real estate agent I mentioned at the beginning of the podcast? Both of her buyers hired the same contractor. He wasn't a bad person, everybody really liked him, but he wasn't prepared for renovation financing. On the first loan, we discovered he needed a workers' compensation clearance cert from the state, and he didn't know his state's requirements. So it took, I think, 3 weeks to get that, which delayed closing. On the second loan, we waited for him to pay his liability insurance premium before we could verify coverage, and he took his sweet time doing it. That delayed closing too. Neither delay had anything to do with the borrower or the loan program or underwriting or the lender. It all came down to the contractor. Eventually, both loans closed successfully, but that contractor never worked another renovation loan with either me or that real estate agent. He just wasn't a good fit for the process. That brings me to the renovation phase. I always tried to make sure that contractors understood what was going to happen after closing. Similar to what we shared with borrowers in the last episode, contractors should know that no work can begin before loan closing, but once the loan does close, all permits should be pulled immediately. Work needs to begin promptly afterward and not stop for extended periods of time. And every loan program has different completion deadlines, so I made sure contractors understood those. We also discussed contingency reserves. I explained what they're designed for, but I never disclosed how much money is sitting in contingency. That was intentional, because I found if you tell some contractors how much is in contingency, they will find crafty ways to use it and not always to the homeowner's benefit. I made sure that they knew contingency requests weren't guaranteed approval. And if a homeowner requested a change that we couldn't approve, the homeowner would have to pay for it out of pocket. I emphasized the importance of calling us first if the scope of work needed to change. Finally, we discussed the draw process. I didn't share every guideline during the first conversation that would overwhelm almost everyone. Instead, I explained the philosophy. Funds are held in a renovation escrow account, payments are made as work progresses, the details they vary by loan program, and we could walk through those together. That conversation alone eliminated countless misunderstandings later. Here's a pause and think moment, something I'd encourage every loan officer to think about. When a real estate agent hangs up the phone with you, do they feel more confident or more intimidated? When a contractor finishes talking with you, do they understand the process or do they simply have a longer to-do list? Because your value isn't measured by how many guidelines you've memorized and regurgitated. It's measured by how clearly you can help other people navigate a process they've never experienced before. I want to invite some listener engagement. I'd love to hear from you. If you're a loan officer, what conversation do you find the most difficult? The one with the real estate agents, contractors, borrowers, maybe all three? Send me your questions or future topic ideas or even your own renovation stories. You can email them to jennifer@therenogal.com or leave me a voicemail at 844-RENOGAL and follow the prompts. If you've developed a great way to explain renovation lending to your referral partners, I'd love to hear about it. Your experience may become the inspiration for a future episode. In closing, the best renovation loan officers don't just simply hunt down documents. They build confidence. Every conversation you have with a borrower, a real estate agent, or a contractor either builds trust or erodes it. When people understand the process, they're more likely to cooperate. When they know what's expected of them, delays become less frequent. And when everyone is pulling in the same direction, renovation lending becomes exactly what it was designed to be, a powerful tool that helps more families purchase and improve the homes they want to live in. In the next episode, we're going to shift our focus from managing expectations to understanding why borrowers choose renovation loans in the first place. We'll explore the financial, the practical, and the lifestyle advantages that make renovation financing such a compelling option, benefits that are often overlooked in today's housing market. Thank you for spending a part of your day with me. This is renovatED for Lenders. Thank you for listening to renovatED for Lenders. This episode was brought to you by Land Gorilla. Deliver clarity to borrowers, contractors, and your operations team with the industry's most trusted draw management solutions. Visit landgorilla.com today.